We also work with what we call Conduit Institutions or investment banks. Two of our greatest partners, probably up until recently, was Bear Stearns and Lehman Brothers. We used to do a lot of deals with Bear Stearns. I know you guys have probably heard what happened to Bear Stearns. Quite unfortunate. It's a company that's been around for 85 years. And we watched these guys get sold for literally pennies on the dollar over the weekend. Lehman Brothers, and I was reading a Wall Street Journal report back there as I was waiting to jump up here, they're going through an extreme amount of pressure because of some of the loans they've made in the past. So Lehman Brothers, Bear Stearns, and JP Morgan Chase, they were probably our three primary investment banks that we work with, but JP Morgan's the only one that's still sort of hanging in there. We've got relationships with Goldman Sachs, Credit Suisse, and some other groups, but that's one of the other sources that we work with. So you can call those guys Conduit Institutions. That's typically what we call them. And Conduit Institutions do what they call CMBS loans, commercial mortgage-backed securities, meaning they originate a lot of loans. They may take my loan from here in North Carolina. They take several other loans from all over the country, different property types, different locations. They get aggregated into a pool. That pool is then securitized, and it's sold as a bond out in the open market. And then our third major source of financing tends to be what we call GSEs. I'm giving you a lot of acronyms, so I know Bob's going to quiz you on all this later. GSEs is an acronym for government-sponsored enterprises. Government-sponsored enterprises. Those are your government agencies: Fannie Mae, Freddie Mac, and HUD. These guys are pretty big providers of multifamily money. So if guys want to do apartments or they want permanent loans for apartments, Fannie Mae, Freddie Mac, and HUD is a great source for that. So once again, our capital for the deals we do will typically come either from insurance companies, Conduit Institutions, or GSEs. These are just some testimonials. We always like to brag about ourselves, so we use this in our presentations. This is our company vision, to be a company that defines the standard of excellence in all ways. And we feel like our vision and our mission both echo our strong belief that an excellent service is required for us to be superior to our competitors and enjoy profitability. The real estate business, it doesn't matter if you're at First Tennessee or if you're at Wharton Gladden or if you work at Meridian. I know those guys pretty well over there. They're great at giving good service. Or whether you're an appraiser or whether you're a mortgage broker, whatever you may do, it's all about service in real estate. It's all about the relationship. So it's all about you being ethical, saying what you mean, doing what you say you're going to do, and saying what you mean. Our mission is to create a company that will help change communities across the world. That's the greatest thing about commercial real estate, and I'm not leaving out residential real estate. I'm only leaving it out because we don't do any residential real estate. But one of the greatest things I feel about commercial real estate is you actually do have that opportunity to change communities. Kevin showed you some great photos of projects that are happening right here in our backyard. People will always need a place to stay. People need a place to work. Most companies cannot efficiently build a building. They have to work with developers in order to have that building created for their company. You guys want places to go shop. Some of you probably like to go to the movies every now and then. Commercial real estate helps to change communities across the world, and we feel like we play an instrumental part in that. I'll skip through that. These are some principles that we like to follow at Wharton Gladden. Proactivity is a huge one. And I'm sure Kevin can speak to some of this. When you're going through the process, when you're looking at a real estate deal, whether you're a broker or you're a mortgage broker, you're a banker, whatever your role is, you have to be very proactive about certain challenges that are going to come up in the process. In other words, my clients, they don't want me to just meet their expectations. They want me to exceed their expectations. They want me to be able to anticipate what's going to happen before it even happens. But so that way that they know they have a better chance of having a successful closing. We talked about relationship. Kevin and I are actually competitors on some deals. But at the same time, we know how to have a great relationship because on other deals, we actually can work with one another to achieve a greater outcome for our respective clients. I run into him out all the time. I see Bob out all the time. All these different guys that play in the real estate game, we see each other all the time. So it's all about relationship. So right now we're going through this terrible market, right? Everybody's reading the Wall Street Journal and you're watching MSNBC and Fox News and the market's crashing and this is the beginning of the next Great Depression. I'm just waiting for the day I actually drive down Stratford and start seeing bread lines again. But the thing you want to keep in mind is the economy is always going to do this. It's cyclical. It's always going to move in cycles. The one thing that I tell my team that you never want to forget is relationships don't change. Whether the economy is bad or whether it's good, Kevin and I should have a good relationship. And if we have a good relationship, then we can feed each other deals and we can keep each other afloat. You have to be honest. I'm sure Bob has drilled that down into you pretty hard if he's been teaching this class. You've got to be honest. You've got to practice integrity. You have to be able to think logically. You have to be a critical thinker. But at the same time, what I stress is, although you think logically, you have to be creative with your solutions. Because some of these projects that you work on, they really require creative solutions. One of the things that we like to tout is we've got really strong relationships nationally. Just in this week alone, I was on a conference call with the group from Credit Suisse down in Atlanta, but then I was on another conference call with a group from GE Real Estate Capital up in New York. I was on a conference call with a group out in California. So what does all that mean? We know people all throughout the country that have access to capital. Well, we are able to add a lot of value to those clients that we work with in Winston-Salem. How many developers in Winston-Salem would know how to get in touch with someone at JP Chase on Wall Street? Or how to get in touch with a group out in California? Oftentimes they don't. But we also maintain a lot of local knowledge. Some of the deals that Kevin was flipping through, I recognize those deals. So we know what's going on locally, but we're able to use our national relationships in order to be able to service some of our clients. And then obviously the one thing about our group that's probably most different than others, we don't do any loan servicing internally. So as I mentioned before, Kevin, when he originates a loan, he's going to service it internally. They take the payments there. We are what you call a production shop. We're only concerned about producing loans. That's what we want to do, is produce and originate loans. We don't really care about servicing them. Now, with our group, because of what we offer, we have a commercial mortgage banking platform. We also do private equity. We do a little bit of asset management, and then we do project management. Now, our core business is commercial mortgages all day long. If we didn't do all those other things that I just told you about, we would just be your run-of-the-mill commercial mortgage broker. That's exactly what we would do, because we broker all of our deals out. But we also engage in a lot of structured finance. So for example, to give you an example, I'm working on an apartment transaction in Winston-Salem right now. Now, we're only going to be able to get this guy about 70% of the money that he actually needs. It's about a $7 million transaction. Now, he only has 20% equity going into the deal. So there's a gap there, right? We can get him 70% from a debt lender. He's got 20% of his own money coming into the deal, and we've got about a 10% gap that we have to cover there. So what we're doing for our client is what we call structured finance. We're structuring that first debt piece, but then we're also going to come in and structure what we call a mezzanine debt piece that will cover that gap equity. So we'll fund the first mortgage through one lender. We'll structure the mezzanine debt piece through an equity provider, and then we'll take his equity capital in order to reach the entire amount of money that we need to reach in order to close the transaction. Now, a lot of other groups will not do that. They don't do a lot of gap financing, but that's something that we really enjoy doing.